Hey, good morning, everybody. Sec here. Okay. I remember yesterday, the title of the day, starting the day anyway, was about buying a gap up after a wide range bar. And buyer stepped up after the wide range bar. It looked like it was headed higher, and it even cleared this little resistance area there. And kind of stopped at what we kind of refer to as a minor resistance. This pivot lows right there. Get a little bit higher. Let me see the pivots on the hourly, but anyway, I always say what's beyond directly to the left is subjective, and it is. So spiders had entered the void, and I was like, well, there can they keep going up to 400? Remember we talked about the SPX, the 4,000 strike with the big open interest, and it just stopped there. What was it? Well, 11 o'clock, 11:30. 11:30 started to roll back over in lunchtime. And so now it's pulling back where we wanted to see it ideally stay yesterday, like, around the 20 MA, back and forth and get the 1, 2, 3 pattern. So now we got a topping tail bar, which some news of something that's going on here. It obviously rejection, it went too far too fast. And that was the risk with the wide range bar and then the gap up. And not only did it gap up, it kept going. So that's really a problem. It kept going. Pal speaking. Oh, Dan, you got to change your name. So, whatever you said, good, bad. I mean, one theme about this market from last year is, every little bit of news, it's like, how I relate it to is the Source Bandit days back in the 90s or the early 2000s. Anybody, if you've been around a long time, there used to be this little guy that used to come on during the day. I can't remember his name. And all the day traders would listen to this guy, whatever he, would say about some stock, and everybody hit the button and this thing would blast up and blast down. And it's like, um, you know, news today, every little bit of news gets reacted to. So, recently it's been bad is good and good is bad. No, it wasn't Tokyo Joe. It was on CNBC, Dan. It was a little guy with glasses, a little kind of shortish looking. I can't remember his name. I think it was Dan something or other. I'm not kidding. I'm not kidding, but I could be mistaken. But no, Tokyo Joe got arrested for front running. Dan Dorfman. That's it, Mark. Dorfman. So, it was like one of the things back then. Dan Dorfman's going to come on. What stocks he going to talk about? And things would, bounce around. So now, well, let's see where it is. It was a little lower here. It was down here to the point where, right, no matter what's going on, it's like this wide range bar hasn't been negated. And so yesterday we said, okay, we want to see it stay in the upper half. And ideally it stays in the upper half on a closing basis the next day and not continue to run up. So now that it's backed off, this is in an uptrend, and now it's pulling back to where buyers should step up. But we've got a reference point that wasn't there before. So we call, in this case, resistance being created. So up here, there really was nothing directly to the left. So now, the prices are pulling back, and this is where buyers should want to step up. And we got these pivot lows down here, which was right on the support area, and they have. So now it's pushing up into resistance, give or take. I suspect we're going to get some jiggling around here. I don't know how long Powell's talking, but everybody's, what might he say? Throw things out of whack. And, just based on this pattern, typically you're going to get some consolidation. Could it be a topping tail of ignored kind of a bar, meaning bar by bar analysis? You got this semi-bullish pattern. And I'll just go over this for those that might be new. Deep angle of retracement, steep angle of retracement, this mess that occurred for the last couple of weeks of the year. Yesterday, I explained to you about breadth getting ahead of itself and stocks that led the way up turning lower. So Starbucks was one yesterday. WDC was on the radar, and more of those will likely experience some kind of corrective price action. The ones that led the way up, why breadth ran up here while this was doing nothing. Well, on this day, it pushed it up above the first red line, and now it's closer to the second. And look, sentiment now, personally, it's dropping off to understand moving average, things that are using a moving average. Back here, at one point it dropped this off, and that's why, on last week it made an initial move up where really nothing of significance really happened. But as it starts dropping off old data, this is going to move up, and it's averaging in the current data. So this is within striking distance now. If they continue to buy calls to give us a short-term sell signal, I don't know if that'll happen, right? So with this down start, it's just day to day, it's bullish, bearish, things are uncertain. It is what it is for right now. But this is a in a sense, a terrible pattern other than for a short-term trading. So news coming Thursday. It just seems today anyway, it's going to be more day trades and seeing what actually shows some relative strength out of those stocks that led the way up. And so we'll see how that turns out. So again, it's came down to where buyers would have showed up. I would have preferred it stayed down there and jiggled around there for the first few minutes of the open to get some kind of rally going, whereas this looks like it's going to be more of a trading range kind of situation today that's going to be created. Let me switch here. So, yesterday at the end of the day, when in the green room, I talked a little bit about, this rejection of, prices having moved up there. And so what I said was, while there was some talk of, okay, that's a bearish bar, which it is, I said, when you have, in this case, a short-term bullish view that hasn't been negated, candlesticks they're going to influence your thinking, right? Well, that's one of the reasons why we use them, right? Bullish influence, now here, more of a neutral influence. But I mentioned if you look at this on a closing basis yesterday, essentially nothing happened. It just went up and it went sideways. So I think for me anyway, it's helpful to see both things, but to look at things, has my bias been negated based on how far this closed? And so one of the things that, explaining how we interpret price action and saying that we want prices to stay in the upper half, ideally the upper third, is that when you, and why I say that is that typically they open like this and they close like this. But if you watch these patterns, what you find is that a lot of times there will be a tail bar, meaning it dips down well below the halfway point at times. It depends on the market environment. And then buyers come in and drive it all the way back up. So the reason why I say we want to see the close stay in the upper third, ideally. And this has. So far, this, might just turn out to be sitting on your hands day other than day trades and what's going to show some weakness, the things that were extended. As always, we're making the best assessment of what might happen by looking at things pre-market. But, you can see it came right down to the area we wanted it to. Momentum slowed, the distance between the turns right there. And, if you were trading in the proverbial curve cave with no news, you'd be thinking, okay, this is where I'm going to want to buy. But it was the news, whatever he said, I have no idea. And things ripped right back up. And now it's coming up to the prior pivot, and it's going to be stuck in this little trading range until proven otherwise. All right. So as far as SPX goes, right, we want to get ideally as close to 3,800. I said yesterday, let's see what premium is there. And with the down move, probably it juiced it up. 38.20. Not bad. 90 by 95, 38.20. Unless something comes out of this guy's mouth that is totally unexpected, it's not going to go there today. So our bias is still that it's going to hang up here. It might dip down. Average range the last few days is around 69 points or so. So I think that's good. If things dip down again, right, so what to do here? This is up to that resistance. If sellers come back in and start pushing it back down toward that buy area, first of all, we're going to think, okay, a retest, look for buyers to show up. But if you can get a little lower, right, I was jiggling around here. If you can get a little lower toward 38.15 or 10, great. So you'll just have to assess that. And on the way up, right, anything near that topping tail, let's say 39.50. Oh yeah, they just zeroed it. 39.50. If you can get 55, you can get 55. I don't see what the number is right now because TC zeroed it. But if you can get 55 and do 20 wide, should be fine. Okay. So we look for the extremes based on the pattern as to the spreads to trade. Right, nothing going on here. Same story. It ran up into resistance. Now push back down. It's whipping around. Russell, same story. See where it is on a closing basis so far. Just consolidating. It got pretty close to that 200, so that was showing some decent strength. Just a reminder, we'll see where this is at the end of the week. A reminder of what I said yesterday about these patterns that we'll see how far they get in the end of the week, but we have this short-term pattern suggesting higher prices against a higher time frame pattern suggesting lower prices. And which one's going to win, we're going to see. But historically, what happens is this fails, this buy setup fails, and it goes down. The only thing that's going to change that is the depth of retracement that prices could potentially get into the end of the week. So we're still in this scenario of be nimble. Transports, that's pretty impressive after this move down. And that's a positive for the market. See how that's what I'm talking about, retracements. We'll see what this does today, but that's pretty darn good after a move down like that to see that relative strength in the transports. Well, that's a positive for the markets. Interest rates, moving down. Everybody wants to see some bad things going on, right? Before, interest rates, coming down, not such a good thing. But now everybody wants to see information that says the economy is slowing down, which enforces, hey, the Fed won't be so aggressive. And but those beliefs change day to day or every few days based on news and whichever way prices are going. So this is gapping up a little bit. Markets are gapping down. What's the dollar doing? That was whipping around there. So where is that? Basically doing nothing, but when things come down to major support as this has, and it looks like it's going to continue lower, be careful. It might, but you can look at the next level, which isn't far away. But most of the time, what happens is things just start to get erratic because it's in such a support level. So it doesn't matter whether it's the dollar or anything else, that this is going to try and hold this area, which, that was bearish, it was bullish. And now you got to keep an eye on this until we get something definitive here, which we don't have. All right. So gold continues up as the dollar down. Silver's at support resistance, which I mentioned yesterday. And crude oil is up a little bit, which will put a little bit of a damper on transport. So we're looking forward to a day of probably more consolidation. Maybe things move for a few hours as they did yesterday, but overall, I don't think they're going to be going too far from the theme of staying within this wide range bar in the 20 MA and probably between the 20 and the 50, give or take. All yours, Dan.
Good morning. Yep, I totally agree. Range bound scenario. The spiders, though, yesterday I found a lot of charts that were just getting rejections. And I said on the spiders, I wanted it to hold this 386 level for me to stay bullish. And voila, that's exactly what it did pre-market. Look at that. Overshot it by a few pennies. And then Powell's over in Stockholm talking about independence. So it's not a big market mover here, in my opinion, unless they start asking him questions. But Steve Leeson was funny. He said, oh, he's just talking about Fed independence. And he said he doesn't want to be Biden's, green energy manager, whatever. And I totally agree. When I first heard that 2 years ago, I think it was Janet Yellen saying, yeah, I want the Fed to monitor green lending and stuff. I said, what the hell is going on here? The Fed should have nothing to do with that, in my opinion. And so apparently Powell agrees via Steve's comments. So we have a lot of open positions. We have 100% bullish positions. We've been in trail mode. Most of them look fantastic. Our only bearish one is a bear call credit spread on Boeing. We're getting a nice gap down here. Greg found this for us yesterday, and we entered on this little afternoon breakdown. And now we can move the stop. We got a guaranteed open profit. So that looks great. If you have any questions on any other opens, just ask me. I'm glancing in the market minder. Everything looks totally fine. We're in cat. This was a beautiful, that is a textbook 1, 2, 3 right there. It's a wide range closing breakout from consolidation, inside bar that stays in the upper third. So that looks fantastic. So I want to watch that. We have a put spread, but I want to monitor that to get on board a directional. And NVIDIA, a no-brainer. I had the theme on the weekend and yesterday was just put spread galore patterns. And here's one, Climo going sideways, red bars ignored, gap breakout. No brainer put spread, so that's still on my list. Stem, I remember trading this in the old days, or maybe back in here we did it. Gap, no, it's a big gap, but no pattern, but something's going on with that. This is the new GE Health spinoff. I have an alarm at 59.60. But I like this gap reversal, and it's a buy setup in the upper third of this wide range bar. So that's it's a new pattern, not a whole lot of data, but gap reversal, control pullback. That's on my long watch list. Saidu gapping up. This is a textbook W bottom. It really surprises me why so many people have difficulty seeing W's. It's so easy. It's momentum move down, little counter trend move, less than a third, and it comes back and retests it in some flavor. And then we look for a potent turn. And so now it's gapping up from this double bottom. It looks good. I'm going to put a little Saidu here. We'll keep an eye on it. This actually was in the weekend letter as a short. And then I canceled it with a deep retracement yesterday. And it was gapping down. Now it's up. I don't know what's going on with this thing. It's a energy drink company. IMOs. There was a number of stocks here that were just commenting on their earnings guidance, either affirming it or whatever. This was one of them. No, there's no volume though. IMOs. But this tomorrow we're talking about bottoming patterns and MT Live. I mean, this is bottoming daily, weekly, monthly. All three time frames are in alignment. I just don't like the light volume. This one's gapping down, ETWO. Yeah, it's in a trading range in a longer term downtrend, no interest. UDMY, that's a sell setup. WDFC. This was one of those. I was just saying there's so many breakouts that got slapped down, and this is one of them. And it's flat, well, down a little bit. It shows AZZ. I can't tell where you're gapping, but light volume also, no pattern. Same. These were all just talking about earnings. Kids, I'm shocked there's no volume if they were giving earnings guidance. This one's gapping down, penny stock, no interest. Gapping up a little bit. It's a mess. I have no interest in trading messes. There's a big old bottoming pattern, triple W. See, I like multi-month stabilizations, 20 and preferably the reason the 50 is not flattening out is because it started from this nasty collapse. So it's going to take more time, the 50 to flatten out, but it's still a bottoming pattern. I'll keep that on the list. I don't know. Window, my other chart. EXPR, it's a penny stock, no interest. Here's another double bottom, new low plus, gapping up, PSMT. So this would be a definite put spread candidate. I'll put that in a window. SNX gap. Wow, it's a big gap up. 107. Gap's too big. BBBY, this poor thing. It just, there's been hedge funds and so forth nibbling at that, trying to think they could bottom fish, but that looks pretty bad. Fro, what is up with Fro? Gapping up to 14. Gap's too big. 15, gap's too big. Now, if this I like pointing out what would be a tier one trade. If this hypothetically we're just gapping up to $9 over yesterday's topping tail, look at this beautiful little, it's kind of a cup and handle consolidation weekly, and it has room. But now it's gapping up to the target. So there's nothing to do with it now. Gap's too big. Now these are a couple from yesterday leftover. IIPR is a marijuana REIT. I'm going to watch that for put spread. A deck watching put spread. Nice continuation bar yesterday and an uptrend. Cade. This is one I told Alex that I like today over yesterday's high. So let's set an alarm at 25.10. And that's what we call a catch-up trade. It didn't participate with the market breakout. But gap reversal, this is on earnings going sideways, and you got a price void all the way to the 200. PayX, put spread candidate. I'll set an alarm at 118.50. Flinch. Now Flinch, another textbook W bottom at the 50. Does everyone just see that clear as day? If you don't, pull out your alphabet from elementary school and pull out a W and overlay it on this. Look, momentum move down, bounce, retest. It's in my potent turn. It looks beautiful. Double bottom, F, L, and C. So that's going in this bottom right. We got that Lulu we're watching from yesterday. All right, Cade alarm, or Cade alarm. All right, so this could be a 5-10 minute high situation. I'm going to put that in a window too. Alarms going off here. I'm watching Goldman. We entered a directional and a put spread yesterday. Microsoft, we still have a half lot of a put spread, and it's up nicely. Relative strength to the market today. Stop is yesterday's low. It looks fine. GNRC, we're in a put spread, but I'm watching this for a directional bottoming pattern, daily, weekly, looks great. All right, this PSMT now. That gap's way, well, I don't know where it's gapping. There's no volume. All right, it just printed up there. So now the gap's too big. I have no interest. Oh shoot, I'm ripping here. Coin is moving too. Look at coin. Coin. The news was that they're laying off another 20%. And there's two ways just to think of that, but the market is the ultimate arbiter. Or does that mean, hey, they're losing business, they got problems, or does it mean, hey, they're going to survive and they're doing what it requires to get their books in order? See, Chase, what I was about to say, and I corrected myself. Wow, I got it, Climo. Wow, this leisure stocks. You know, another one, Greg, that had a beautiful gap breakout the other day, and I was too busy. It's one of those things where I'm too busy at the open, but that was on my list. Look at that beautiful SIX. All right, so, you know, we got our pullback. There's no great pattern right here, but I'm still in favor of put spreads, and I like the momentum on this 5-minute bar right here. All right, coin is moving. All right, Cade. You know what? Let's just 2513, 2514. I think this looks fine. Now buy over 2514, maybe stop 2460. GNRC up alarm. Valet. Yeah, you know, it's up a lot, but I like yesterday's continuation bar. A W, triple W, I said bottoming pattern. I'm watching triple W. You could buy the high, stop under for a day trade, stop under this pivot. Also, it's a no-brainer put spread if there's any juice. Wolverine worldwide. I would do the 1050s. And there are no 1050s. The 10s are only a dime. All right, this FLNC. If it closes here, that's a beautiful 1, 2, 3 now. Let me check. Puts are too spready, otherwise I'd be all over that. City B. Bottoming pattern, we're in this. I'll set a new alarm. Zoom, I had an alarm go off, but we have a put spread and it looks totally fine. 68, 48. Wait, 65, 60. Yeah, Lulu's looking a lot better. Cat, keep an eye on, because we're buying, it would be buying the pullback of a wide range igniting. It's like it's buying the bottom of a 1, 2, 3 is what cat kind of is right now. Zoom adjustment. One fine. So we have a nice open profit. 131.94. And UPS alarm. Deeper tracement. Hey, Don, just email support, please. I'm busy here. Thanks. All right, so UPS. 175, 170. It actually stopped out. So we stopped out of the game.